At Insightful Value, we spotlight companies the market might be sleeping on, and today that includes Novo Nordisk. The stock has pulled back recently, but the fundamentals are anything but weak. If you're wondering why a pharmaceutical giant with world-changing drugs is suddenly trading lower, this video breaks it down. This review is for informational and educational purposes only. It's not financial advice. If you find value in this type of content, hit that like button and subscribe to the channel. Novo Nordisk is a Danish biopharmaceutical company with a focus on diabetes, obesity, and other serious chronic diseases. It's the global leader in insulin production and a major force in the obesity drug market thanks to its blockbuster drugs Ozempic and Wegovy. These aren't just big hits. They've become cultural phenomena, especially in the United States, driving massive demand and media attention. The company has been expanding its manufacturing capacity to meet this global wave of demand, which has translated into huge revenue growth over the last couple of years. In 2024, Novo Nordisk reported over $34 billion in revenue, growing around 30% year over year. Operating margins are strong, hovering near 43%, and net income continues to rise steadily. The company has a solid history of free cash flow generation and a clean balance sheet. Dividends have been consistently growing, with the most recent payout representing about a 1.3% yield. Not huge, but backed by strong fundamentals and a commitment to return capital to shareholders. So, what caused the dip? Part of it is expectations. After explosive growth, some investors wonder whether demand can keep climbing at this pace. Regulatory concerns are also bubbling up, particularly around access and reimbursement for weight loss drugs in different healthcare systems. There are also supply constraints as Novo continues to scale up its manufacturing operations. And of course, there's the broader market rotation away from high-growth pharma stocks to more defensive or undervalued sectors. But from a value perspective, the pullback may represent an opportunity. Novo Nordisk is not a speculative biotech. It's a highly profitable, well-managed company with strong pricing power, brand loyalty, and a growing global presence. It continues to invest heavily in research and development, including in areas like cardiovascular treatments and rare diseases. The obesity drug market alone is projected to exceed $100 billion by the end of the decade, and Novo is in pole position. Risks still exist. Competition is heating up, particularly from Eli Lilly, which is making strong moves in the same therapeutic areas. Regulatory hurdles and pricing pressure could also slow growth. And as always, high expectations can be a double-edged sword. Any sign of slower uptake could trigger further volatility in the stock price. Still, the long-term thesis remains solid for investors who believe in the company's leadership and innovation. The stock price might be down, but the core business is firing on all cylinders. Whether this is a temporary dip or something deeper remains to be seen. But the fundamentals suggest Novo Nordisk isn't done delivering. Insightful Value is here to help you cut through the noise. We break down complex companies and show where the real value might be hiding. Check out more deep dive breakdowns like this at insightfulvalue.com. Don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss a new upload.